Thank you for joining us and welcome to Business Incorporated. I'm Chimezie Obi Iwagu. On today's program, protesters stage sit-in at Johannesburg bourse over gender crime. World Bank lifts aid embargo and approves $450 million loan for Tanzania. Plus, Zambia cuts its 2019 economic growth forecast to 2%. But we'll begin in South Africa as hundreds of protesters staged a sit-in at the entrance to the Johannesburg Stock Exchange to call for an end to gender-based violence in South Africa. The demonstration, which began before dawn on Friday, disrupted traffic in the country's main economic hub of Sandton. It's the latest in a series of protests triggered by the rape and murder of a 19-year-old university student in Cape Town last month. Crime statistics released on Thursday show 2,771 women were murdered in South Africa, and in the 12 months through March, the number of reported rapes rose 3.9% to 41,583 in the period. The organizers of the protest, a group of civil rights organizations known as Call to Action, called for businesses in Sandton to shut down for the day in support of their cause.
We have been talking, but the scourge of women who have been killed and children in this country is just out of control. Apart from the government being involved, we also want the business to be involved, to take us serious, to try and fund the projects that are dealing with gender-based violence. Hence, we are here at the Johannesburg Stock Exchange to bring awareness, to come and plead and say, you know, we are one country and women are being slaughtered. Women are being killed, children are being killed. There is just too much tears in this country. And then we want them to listen to us. We are looking for change. We are looking for a country where women can be free, women can walk in the night without fearing, and the children as well. This is what we need.
And I'm of the firm belief it's only when we don't just talk, we take action. We put pressure on the authorities, and people can see, even against the perpetrators, that people are serious about putting an end to this scourge. And I mean, I go to many countries, and one of the things that we don't have in South Africa is that all of us, and women and children in particular, don't feel free enough to walk the streets, even during the day. I'm not even talking about the evenings, and that is unacceptable, completely unacceptable. You go to the streets of Harare, you go to the streets of Dakar, you go to the streets of Kigali, you walk at night, 10 men pass you and you don't feel fearful. And that is unfortunately not the situation in South Africa.
Meanwhile, South African President Cyril Ramaphosa will skip the United Nations General Assembly this month and instead focus on dealing with rising violence and the country's struggling economy. Ramaphosa decided to remain in South Africa to attend to the implementation of government's urgent measures on gender-based violence, the restoration of order and stability in areas affected by public violence, and to oversee initiatives to turn around the economy. Well, let's look at the market numbers now. And despite that early protest in front of the Johannesburg Stock Exchange, the market was upbeat at intraday with the JSE index up 0.65%. Here in Nigeria, the positive momentum seen this week continued at intraday with the all-share index of the NSE up 1.07%. Egypt closed on Friday but traded in the positive on Thursday. Kenya also closed in the green on Thursday. In the Middle East, the markets are closed, but it was more of negative sentiment on Thursday, where the Abu Dhabi index closed down 0.2%, dragged by market heavyweight First Abu Dhabi Bank, which edged down 0.4%, and Abu Dhabi Commercial Bank, which lost 1.7%. Dubai, however, was up 0.12%. Qatar's index fell 0.05%, while Saudi Arabia's stock was also down 0.30%. And in Europe, stocks soared on Friday morning after the European Central Bank delivered an aggressive stimulus package in a bid to reinvigorate the ailing Eurozone economy. Well, Conrad will update us on this. Good afternoon, Conrad.
Good afternoon, Chimmy. Thank God it's Friday, even if it's a Friday 13th.
Yeah, thank God it's Friday, Conrad. Well, it's Friday, of course, the 13th, the day after the European Central Bank came out with bold monetary policy measures to fight a further downswing of the economy and a potential drift towards deflation. Now, the reaction on the stock market yesterday was not overwhelming. What's the mood like today?
Well, I think it's really worth taking a look at some of the price reactions we can see today on the trading floors. Of course, as you can see right behind me, the German share index is up, so the mood among stock traders is pretty positive. But I think it's very interesting also to say a word about what's going on the bond market and on the currency market today, because bond yields here in Western Europe, as well as the euro-dollar exchange rate, they are not exactly reacting the way one would think after yesterday's bold moves by the ECB were announced. The largest part of the bond yields of Western Europe are on the way up, and also the euro only very temporarily, for just a moment yesterday, lost some ground, and now it's on the rise again, actually at around about $1.11. The euro is trading significantly higher than it did yesterday before the ECB came out with its decision. And this gives us a hint that the investors already now are focusing on what to expect next week. This is when the Federal Reserve, the Open Market Committee, the monetary policy makers in the United States are having their next meeting, and it's widely expected on the financial markets that the Fed will cut interest rates to something, of course, which is bound to weaken the dollar. Another reason why the dollar is down today is that the US budget deficit, the deficit of the United States of America, has surpassed $1 trillion again, and which is not only a significant amount, of course, 1 trillion, but also this indicates that it's very likely that soon the US, the Trump administration, will borrow more than is in the planning right now. And this too, of course, is something potentially weakening the US currency and giving the European currency a bit of a push.
Well, an informal meeting of EU finance ministers is taking place now in Helsinki, Finland. How much of yesterday's ECB rate cut and quantitative easing revival will be in discussion for the ministers, as they consider the economic future of the region?
Well, given, of course, that some of what Mario Draghi yesterday, the ECB chief, had to say was quite a surprise, it's very likely that the ECB's decision, its monetary policy, will be at least a significant part of the discussions of the Euro finance ministers in Finland. But I have to say, it's very likely that the finance ministers will be at least nearly as divided as the members of the European Central Bank's Council were yesterday. I checked the media, the newspaper headlines today from media outlets from all over Europe, Germany, France, and the Netherlands, Belgium, Austria, also Italy and Spain. And I have to say, only here in Germany, maybe also in Austria, the criticism of the European Central Bank's return to quantitative easing, to those bond purchases, is really loud. In the other countries of the euro, there's much more understanding that the European Central Bank has to do something in order to really follow the path to the 2% price target of consumer price inflation. So it's quite likely that at this meeting today of finance ministers, the focus will also be very strong on what the governments can do in order to give the economy a boost. And here, of course, it's already long time been discussed that Germany should do more because, of course, as you know, Germany is the one country that benefits a lot from the generous monetary policy, with, borrowing costs for our finance minister being historically beneficial for the country.
All right, Conrad, at this point, we'll have to leave it at that. And, of course, it's now time for me to say thank God it's Friday. Let's hope for a better week next week. Enjoy the rest of the weekend.